Welcome to Your Time, Your Money, the show where your time is just as valuable as your money, and we know that. Thank you so much for tuning in today. Today's topic is the investment building blocks, and this is something that I learned over 2 decades ago. When I came into the business, this is a model that our parent company had ingrained in us and taught with us as young advisors, and I think it's even more prudent today with there being so many different advances in technology that have been brought into the workplace, that sometimes we lose sight of what are the real building blocks, or what are the real things or things that we can do to create wealth, protect wealth, and make sure that we can retire comfortably or accomplish our goals. So let's get into it and really talk about what those building blocks are. The first building block that we always like to bring up to a client is savings. And this a lot of times is overlooked. We find a lot of clients are living paycheck to paycheck, or they're investing a large amount of money. Maybe their income is adequate and it's funding everything no problem, but they are waiting for that next big check to clear to pay up debt that they're paying forward. And savings is much more than just the emergency money. A lot of times people overlook savings and the value of it. And the real value of it is twofold. One, it's protection. So it helps you from not going into credit card debt. It helps to pay off bills immediately. But the other thing that people don't realize that savings is it's opportunity money. And it's money that you can readily access when there is an opportunity to invest or do some other type of business venture that you might have. So that savings building block is very, very important. Typical vehicles you would want to use in a savings building block, maybe a high yield money market account, high yield savings accounts. You can even ladder bank CDs, any cash assets, but you do want it earning something. Now, the thing with that building block is you always want money going into it. So, some people say, how much should I have in there? 3 months, 6 months worth of bills. I disagree. I think you should always have some money going into that savings building block. And why is because let's just say you change the name from savings building block to opportunity fund, right? Well, who doesn't want an opportunity fund? Who doesn't want money sitting on hand ready to take advantage of a business venture, a down market, a stock that dropped in price, or something else that you can make a lot more money in? So number one building block, the savings building block, is really your foundation. It's the most important part of really any plan that we have. The second building block is insurance. And this is one that's very commonly overlooked, because the common trend when you say insurance is people say, I don't need insurance. Well, in some cases you may not, but you may want insurance. And insurance is there really for a couple different things. One is to protect you, it's to protect your family, and it's to protect all your future goals while you're trying to save up for them. Right? The product is irrelevant for this context of this conversation. It could be term, it could be whole life. There are benefits to both. There's benefits across the board. But the fact that you are ensuring and protecting your future goals for you and your family is very important to understand. It's important that you have that coverage there. Heaven forbid you or your spouse pass away and you leave a family, a loved one, kid behind without the monetary resources to get to the goals that you're saving for. The other reason insurance is an important building block, because it gives you a non-correlated, in some cases, or another area where you can dip into the cash for either opportunity, to replace lost income, and the other thing that insurance does for you is it allows you to add on riders such as long-term care, some end-of-life care, estate planning concepts to it that you can't do in a lot of other vehicles out there. And once again, insurance should be something that you continually are adding to, whether it's in a premium or a new policy. If you're already done paying on a policy, it should be another building block that consistently gets added to, because insurance has a lot of distinct advantages that you don't get elsewhere. And once you understand insurance, it goes from a need to a want in some cases. A lot of times people want to have it later in life when, unfortunately, they can't get it. So I would suggest that you get it early in life. And then the third building block, which is what everybody relates to as investing, and that's investments. Right? And the common mistake with investments as a term is that people think investments always have to be the stock market. Investments is any opportunity for you to increase the amount of money that you put away so that it's more money later down the road. So this could be rental properties, this could be business ventures, this could be mutual funds, stocks, bonds. it can be a plethora of different choices for you. But those three building blocks, savings, insurance, investments, all also work together. Investments can be used to fund and increase your savings for opportunity. Investments can also fund insurance. Insurance can be used to protect your investments. It can be used to protect the family need, and they all kind of work together. The problem is when you think about a household, if they don't have one of the three building blocks, they have more of a risk than most other households. Right? Think about it in the case of if you don't have savings. Right? Once an emergency happens, let's say the stock market drops, all your investments are in the stock market in some case, well, what do you have to do? You have to sell when it's low. If you had the emergency money and the savings there, you wouldn't have to do that. Let's say that market dropped and you had savings, it gives you the opportunity to invest in the investments at a low, which is what common sense tells us to do, buy low and sell high. So today I just wanted to chat with you about the three building blocks, savings and insurance and investments. Those three building blocks should be built into your financial portfolio. If you have questions about that, how much should be in each, which products should be in each, how do I utilize them effectively, reach out to Iron Tree Financial. You can reach us at 43 British American Boulevard in Latham, 12110. You can reach us at 844-444-YTYM for Your Time, Your Money. Please send us in emails if there's questions, if there's other topics that you want us to cover. Don't forget that you can also share this with your friends. So if you share it with your friends, they can also subscribe and get timely content to them. And that way we know that we're reaching more people out there as well. As always, it's your time and your money.